Hi everyone, welcome to today's video. So let me start today's video by showing you a very interesting graphic and an observation which will both fascinate you and scare you and excite you. So what graphic am I talking about? Okay, so take a look at this particular chart and what you will observe is that from a time period roughly towards the end of 2009, 2008 we had a major crisis. From 2009 to 2014 approximately, index gave almost 0% return. Right? Absolute 0% return. Now let me show you the last 1 year data. You will see that, hey, we are at roughly 16,200, 300 levels. And these levels existed almost a year back. So this is point one. Second, take a look at this particular graphic. This is from Economic Times 2010 edition. This was published on exact date February 15, 2010. And you can see that inflation during that period in time in India was roughly 8.56% in January, 7.31% in December, and something similar is happening again. So now if you aggregate these two facts, you will say that, okay, after 2008, the markets corrected and they stayed corrected for almost 4 years and people made almost 0% returns. Now 2022 markets very volatile. 1 year period has gone by, no returns. So probably for the next 3 years, I will not be making any returns. So I should go to Himalayas and start doing meditation or become a travel blogger. I don't know. So important point is that people are super scared about the market, and rightly so, because this type of data keeps on coming up. On this video, I'm going to systematically prove it to you that this is actually a great money making opportunity, and I myself invested 50 lakh rupees and I'm going to continue to invest quite aggressively in this market. I will provide you with all the data, facts, and eventually you can make a call. What is the right way of investing in it? I will show you my live investment also. So let us get that discussion started. And first and foremost, comforting point comes from this particular chart. So take a look at this particular chart. This is very, very interesting and fascinating. And what you will see is that this is S&P 500 BSC chart. So let me quickly explain what S&P 500 is. So S&P is the US index. So it outlines the top 500 companies in the US and an index is carved out of it. So very similar to Nifty 50. Nifty 50 is the collection of top 50 companies in India. So this study was done on S&P BSC 500. So this is the Indian version of S&P 500 and it is the collection of top 500 Indian stocks. So it represents the market, so to say. So if you go down this list, you would start noticing some really interesting things. What you would notice is that in some periods within 2010 itself, markets go up like crazy. Then they fall down by crazy. They go up by 12%. Then they fall down by 10%. Then they go up by 31% and they fall down by 10%. Then similar trend continues in 2011 also, that hey, markets up by 6%, then falls by 15%, then falls by 9%, then falls by 17%, then goes up by 10%, so on and so forth. So the point that I'm trying to make here is fairly simple, that when the market goes up, we assume that the market will go up like this in a straight line, but it doesn't happen. It happens like this, that it will go down, then it will go up, it will go down, then it will go up, then it will go down, then it will go up a little bit more. So there is always a zigzag path. And reverse is also true, that when the market is falling, it will not fall down in a straight line. It will go down in a zigzag path. Now you would say, okay, fine, great theory, but how do I make money out of this? So you make money out of this exactly the same way how people made money here. That yes, index did not move during this period in time, but there was so much zigzag. If you zoom in and see, there will be so many zigzag patterns that will get formed here. These provide you excellent money making opportunities, as I showed you in the chart, that there were significant periods where the index moved by more than 10%. So if we can identify the bottom and try to sell it at top, we are going to make money consistently in this market. So this becomes a swing trading market for me when it comes to index fund. I have been saying for many months now that, hey, we are moving in a sideways market. We are moving in a sideways market. So today's video is going to cover how we can make money in this sideways market. And for that, I will take you to a golden rule. And the golden rule is that you buy during period of uncertainty right now in the market and sell during the period of certainty. What do I mean by this? So let us make an example and understand this point from 2020 COVID crisis period. So during COVID period, the markets fell quite aggressively. Everyone understands it. Why did the markets fall? Because there was a lot of uncertainty. No one knew that how the markets are going to shape up, what the impact of COVID would be. There were a lot of unanswered questions that investors had. So investors ended up panicking. They sold a lot of securities. FIIs went away from the entire world. They kept all the money under their bed. I don't know. But the bottom line is that the markets all across the globe fell. Why? Because that was a period of very high uncertainty. And anyone who purchased stocks during that period made crazy amount of returns irrespective of which stocks you were buying, or at least on majority of the stocks that you were buying. Opposite happened when the world became very sure that, hey, you know what, this COVID problem is not like world threatening, so to say. Things will come back eventually to normal. The market started running and they beat their previous peak also. So if you would have purchased stocks in 2021, which was a period of certainty, you would have lost money. And the stocks in which I also invested in 2021, they are sitting on a loss. But yes, overall portfolio is very much in green because I purchased a lot of things in 2020 COVID times, and still the portfolio is very much in green from that particular perspective. Important lesson to draw from this conversation is that, hey, if you can figure out the period of uncertainty when the markets feel very, very jittery, uncertain about things, and you can bet your money during those volatile periods and times, you are almost guaranteed to make money during that period. When would the markets turn green? I don't know, and no one knows from that perspective. But the important point to note down is that if you buy in period of uncertainty, market always cuts its previous high and it makes new highs. Now, let us start having conversation around how you would decide that the markets are uncertain, because we have been hearing about that, high inflation is there, Feds are going to do this, that, Russia-Ukraine war is happening. Yes, but how would you factor in the uncertainty by using some quantitative measure? So for that, we go to an index called as VIX. VIX in easy to understand non-technical terms means this, that hey, it indicates the level of volatility that is there in the market. So in simple terms, what does volatility means? So volatility means this. Hey, this is a straight line. It is moving in a straight line fashion. There is no volatility. There are no spikes that are being created. Now, if the graph starts behaving like this is still going straight and there is a lot of up and down. So this indicates volatility, and you will start seeing something similar happening on this chart, which is called as the VIX chart. And if you type out VIX India, you will get this chart on Google. Very easy to monitor. So you would see that right now we are at India VIX level of 21.25. So is this number high? Is this number low? Let us try to draw some parallels here by looking at the historic data. So you can see this peak, and here the VIX was approximately 70. This was a period of high volatility. Why? Because there was a lot of uncertainty. Usually the VIX go up when uncertainty goes up. And if you would have invested in a period of high volatility, you would have made a lot of money. 2020 was a highly volatile period. Again, 2008 is not coming up on this data, but if you check the 2008 data also, there would be a lot of uncertainty associated with it, and VIX would be very, very high. Now, opposite happens when the market stabilizes and conditions of certainty builds up. So under period of certainty, when everything is going smoothly, the Russia-Ukraine crisis will get over and inflation crisis will get over and everything will be good, then VIX will come down quite a lot. For example, during this phase, you would have seen that, hey, here the India VIX was very low, and in 2021, markets were shooting high. They were making new highs. So right now, if you observe in the market, there is an opposite type of a relationship between VIX or the volatility index and the market returns. So just to help you understand this point more, let me plot this on Nifty 50 chart, and then I will further build upon this point. So you can clearly see that, hey, this was a period of panic, and this was also a period of very high VIX. This was a period of growth when the stock market grew quite a lot, and this was a period of low VIX. Now again, let me take you to that VIX chart and let me further help you run some numbers through it. So you can clearly see that, hey, if you would have purchased anything from the end of March to roughly June, July, you would have gotten things for cheap. You would have gotten things really, really inexpensive. And let us again go back to that chart, that after the 2020 fall, the market started running from when? When I say running, it means that it crossed its previous peak. It crossed its previous peak from October onwards. So anything that you would have purchased during this zone from approximately March end to July, August time, when VIX was very high, you would have been sitting on crazy profits even now on the stocks that you would have purchased during this period of time. Now, opposite happened when the stock started running up. So anything that you would have purchased from December of 2020 to roughly November of 2021, markets were shooting up, everything became pricey, so to say, and let's see what happened with VIX. So during this period, the VIX constantly fell. It constantly fell and it approximately reached roughly 10-11. So this was a period when equities, now looking back, became very expensive and VIX fell a lot. Now we are sitting in 2022 and opposite has started happening. You will clearly see that this U-shaped curve is getting formed. That VIX is rising constantly. Now, to what extent it will go up, no one knows. It can shoot up due to some unforeseen event and bunch of other things can happen. But right now, if you observe the levels in absolute terms, we are hovering around 21, 22. This is high VIX. This is not low VIX by any standards. So it indicates a great market to buy. And this is how you can figure out if you are buying at a period when the markets are uncertain versus not. So right now markets are uncertain, VIX is very high. So therefore it's a great market to buy and it's almost given that you are going to make money in the future. Now, of course, this comes with a disclaimer that please do your own due diligence. This is not an investment advice from my side. This is what I'm doing, that I'm buying in this market because I feel fairly confident that the markets are going to come back up. I will also show you the data why. Now comes the natural question that Akshat, you have given us all this theory. Now can you tell us, number one, when are the markets going to recover so that I can time the market and invest? And number two, what would be the best way of investing? So let us start having that conversation. And let me first and foremost tell you, me nor anyone else can predict when the markets are exactly going to come back up. We can just do a risk reward analysis and talk about whether it's a sensible move right now to invest more money versus not. And right now it looks like a sensible move to invest more money. Now, why can't we predict the market? Simply because of the fact that we don't know how these 5 things are going to shape up from this point. First and foremost, Feds are increasing the interest rate. Are they going to jack up the interest rates very, very quickly, or will they be gradual about it? Looks like right now that they will be gradual about it, and that is what common sense logic tells us. So this seems like a done bet that the central banks are not going to shock the market by increasing the interest rate very, very sharply, because that will impact the growth and decelerate the growth, and the world cannot afford that to happen. So this is point one, and there is less uncertainty about this. So this is point one. Second is inflationary concerns. Now, central banks can't predict inflation. So of course, Akshat can't predict inflation. Similarly, no other person in India or the world can predict inflation. So this is a highly debatable point. This no one knows, and unless we get clarity on it, we would not know how soon the markets will recover. Similarly, if you go down this chain, will the supply chain issues get solved? The answer is 100% yes, it will get solved, because world will always figure out ways to solve all these different issues that, hey, we are not getting like oil from like Russia, this, that. No, we will figure out other ways of procuring oil. That is not going to be a problem. That is almost guaranteed. Then comes the fourth issue that, hey, Russia-Ukraine crisis, when will it get solved exactly? No one knows, right? This battle is waging at an individualistic level as of now. It's a war of ego for Vladimir Putin. And if he decides to nuke the entire world, he will do it. There is nothing that you and I can do it. There is nothing that US can do it. It's a nuclear country. It can do whatever it wants. Is it a scary situation? Yes. And that's the type of world that we live in. But again, this is a highly debatable point. No one would know what the exact action of Vladimir Putin would be. No one has a scan of his brain, so to say. Then comes the final point that, hey, at what rate the US global domination will come down? There has been a lot of talks that, hey, Russia and China are ganging up together and they are going to play against the US. That is already happening. So the world is getting polarized. It is becoming less and less global. USD is losing its prominence in the world. All those things are happening. It is again true that the US is losing its world domination power, so to say, and it might lose its status one day as being the reserve currency of the world. So the situation does not look good for the US, and probably 20, 30, 40 years, there is a very strong chance that US dollar might not be the global reserve currency of the world. But can you and I predict that how soon this fall will happen? The answer is no. All we can do by analyzing all this stuff is that, hey, is there more uncertainty or less uncertainty in the world? If the answer is that right now there is a lot of uncertainty, it's a great time to be investing in equities. Why? Because people are scared, therefore the VIX is high. If the VIX is high, history tells us that we are going to make money whenever we end up getting clarity on these issues. It's not about which way the world will go. For example, in the Russia-Ukraine crisis, let's assume that Russia comes out on top and Russia and China together challenge the US. If that's a scenario that the world is not vouching for, then it will get factored into the stock market, but the stock market will get clarity on that topic. And the stock market loves clarity. As long as we are getting clarity on the stock market, stock markets will recover. That has always happened and it will continue to happen. Please don't doubt that. Now, one quick point that I will leave you with is that due to all this uncertainty that is happening of the 5 macro points that I told you, great stocks like Amazon has fallen by roughly 33%. Stocks like HUL have fallen by a lot. Stocks like HDFC Bank have fallen by a lot. Stocks like HDFC AMC have fallen by a lot. People are assuming that people will stop investing in these type of companies altogether. And if you actually go and study these stocks, so yesterday I made a video on Amazon, so please go and watch it. It's a very important video. It will help you understand the reasons for fall of Amazon stock. For Amazon, for example, the stock has fallen because there are inflationary concerns that the operating income of Amazon has come down. Why? Because it got a $2 billion bill due to increased wages and other transportation charges. Now, this problem is transitory for companies like Amazon. They will either increase the prices of their product, they will squeeze like small retailers, but one way or the other, Amazon is going to make crazy amount of money. It is almost given. So these type of opportunities become like a great opportunity to buy these type of stocks. Now, many of you would say that, Akshat, you know what? It's fine, but I feel very jittery about investing. So there are two final points that I will leave you with. So first and foremost, take a look at this GDP prediction that is being done about India's GDP growth. So take a look at this chart. This is a very important and fascinating chart. Some are predicting that India will become a 5 trillion economy by 2029. Some are predicting that India will become a 5 trillion economy by 2025. But you need to ask yourself a question that how will India become a $5 trillion economy by 2025 or 2029? Why? Because its GDP will grow. Okay, how will GDP grow? Because the companies are producing more stuff, selling more stuff, individuals are consuming more. Now, some companies are going to produce it, right? And they are already listed on the stock market. So how can the GDP become $5 trillion without the growth in the stock market? So the growth of the stock market is directly related to the growth of the GDP of a nation. It's very easy to understand. So if you believe in the narrative that, hey, India is going to grow, simply go and invest in the stock market. Now, what is the mechanism through which you can do this? You can simply invest in index fund. So I strongly believe in this chart, and therefore I took positions in index fund today and I invested more of my money in index fund as of now. And this is me making a live investment. So now let me quickly answer 2-3 very important points that you might have in mind. So your question might be that, Akshat, why did you purchase index funds and why did you not purchase direct equities as of now? I have already been purchasing equities. I am already a heavy investor in equities. Just as an alternate for swing trading, I have purchased index fund. I had made a separate video on why I have purchased these index funds because the commissions are low. What swing trading on index fund is, please watch this video. You will understand the entire story behind it. But to cut the long story short, right now my position on equities is fully booked. If the market falls further, I will buy more equities directly. But as of now, I'm purchasing index fund. Plus, I'm investing directly in cryptos. Okay, so please don't go berserk in the comment section that, hey, why are you purchasing cryptos, etc., etc. I'll make a separate video on that. But right now, individually, I'm building more of my portfolio in cryptos. As I've been saying for the last several months that I will amp up my portfolio to 20% in cryptos and 80% in stocks. So that's the strategy that I'm following. So therefore, I'm purchasing individual cryptos, not individual stocks at this juncture. And I'm investing some money in index funds. Now, second key point, that will the markets 100% recover? 99.99%, yes, they will recover. That's not a problem. Meanwhile, what would happen is that there might be a lot of volatility. Markets might still go down quite aggressively. No doubt about that. We are still very much in that sideways movement range. So there is nothing to worry as such. It looks okay. There are no fundamental issues at play. Long term, I'm quite bullish that India will grow and we will be able to make a lot of money. So I will be swinging this index. Now, what do I mean by swinging the index? Again, please watch my video that I had earlier pointed out to. Now, third and final point in this market is that please don't trade. It's very difficult to trade in a highly volatile environment. You are most likely to lose a lot of capital. Please take investments from a long-term investing perspective. Now, what is the definition of long-term? It is very simple. That long-term investing means that you are not dependent on that money. It can be a period of 2 years. It can be a period of 3-4 years also. If you're not dependent on that money, then you would be okay taking some notional loss on that money. Because in a high volatile environment, the type of environment we are right now in, no one can predict what is going to happen in the stock market tomorrow. So it's a futile exercise trying to predict the market. But yes, to cut the long story short, markets are volatile. Therefore, it is a great time to buy. So keep on buying. That is what I would say. whenever the markets start running, they will run really, really fast and you will have a very hard time catching that bus. In fact, let me show you this data in a period of 8 to 10 months between August of 13 and 9 September 14, markets gave a run up of roughly 62%. Right? So you will have a very hard time predicting when the markets are rising. You would probably not even understand it. And by the time you understand that game, markets would have already run up and you would not have had the time to purchase any of the stocks or any of the indices. So I hope you enjoyed the video. Please press the like button, share it with your friends, and I will see you tomorrow.